Yeah.
Yeah. Very good evening to everyone. Welcome everyone for this non-academic program, mainly on investments. Before that, I request our KSCASI chairman, Dr. Narayan Chandra Hebsur, to do the welcome address. Hebsur, sir.
Thank you. Thank you, Chandru. I bring a very warm welcome to our my teacher and today's speaker, Dr. Sharad Tanga, sir, who has been a mentor for us, and he has been a teacher of teachers. You can say now all his students have become HODs and many things. So he is more of become a teacher of teachers now. And
Thank you.
thank you for accepting the invitation and doing this program for us, sir.
Pleasure.
Welcome our my classmate and friend, and he's a philanthropist and burning person, Prashanth, and photography, everything. He's into many talents. He's one of the good investors also. So he's moderating this session today. I bring a very warm welcome to you, and
Thank
welcome
you, sir.
Dr. Venkatesh. Dr. Gadi Divakar, our national EC, our state EC members, Dr. Shiva Prakash has joined, and our past chairman, Dr. Tejaswini Vallabha madam, and many other dignitaries. I bring you a very warm welcome. All surgeons and postgraduates, you should enjoy this. This is a very important topic, what we are going to talk about. We need to learn some financial investments also, which we are going to learn today. I thank all of you for joining. Please witness this without any breaks. It's a very important program. Thank you for joining us. We'll have go to the program next.
Thank you, sir. This session is moderated by Dr. Prashanth B Nirvani Rao. Prashanth sir is a consultant surgeon in the Chaitanya Gastro Institute in Tumkur, and also he is the present city branch, Tumkur city branch president. So I'll request Prashanth sir to continue the session. Prashanth sir.
Thank you, Dr. Chandru. Good evening, everyone, and welcome to today's session of Navigating Equity Investment, a Surgeon's Perspective. We are fortunate to have with us Dr. Sharad Tanga, who will offer invaluable insights into equity investments, particularly from the viewpoint of a surgeon. As doctors, many of us are not always well-versed in the financial world, but today we aim to simplify these concepts and make them accessible and relevant to our profession. Please feel free to submit your questions during the session, and we will address as many as possible at the end of the session. Let me start with a quote that resonates with both medicine and investment. The best investment you can make is an investment in yourself. The more you learn, the more you earn, from Warren Buffett. As surgeons, we spend years performing our craft and dedicating ourselves to patient care. But today we will learn how to invest wisely in our financial future, ensuring that our handwork in the OT leads to a long-term wealth and security. We all know Dr. Sharad M Tanga as a celebrated surgeon from Gulbarga, a name synonymous with excellence. But today it's my pleasure to introduce a multifaceted individual. He is an ex-professor and head of the department of MRMC Gulbarga. He was the chairman of KSCASI 2011-12, governing council member ASI 2007-10. He is an equity investor and a freelance writer. He was the Senate member of RGUHS twice, and he is the ex-medical superintendent of Basveshwara Teaching College. He was the president of Rotary as also RI district officer. And not only that, he has another extremely adventurous person. He is an explorer. He made a road trip which started from Mumbai and then ended in Beijing, traveling about 8,000 kilometers via India, Nepal, mainland China. And not only this, he's also a trucker, a backpack traveler, and his equity journey is also very interesting. He started his investment during the Arshad Mehta boom, which was in 1993-94. And Dr. Tanga has weathered major market collapses, including Arshad Mehta scam, the dot-com bubble, the Ketan Parak scam 2008, and the 2008 financial crisis, as well as the 2020 COVID crash. His enduring passion for equity market is reflected in his resilience, which he describes as having the market kakida. That is, his passion for market is so much, in spite of all this crash, he has made a positive financial effect. Over to you, Dr. Sharad Tanga.
Thank you, Dr. Prashanth, for your warm introduction. Chairman, Dr. Hebsur, Honorary Secretary, and Dr. Chandrashekar, eminent ASI Governing Council members, past President Dr. Siddesh, and all other eminent ASI members. At the outset, let me thank Dr. Hebsur for having given me this opportunity to speak on a topic which sometimes is a sort of very difficult topic, in the sense is preparing an academic slide or talk is easier, but when you are preparing something in an offbeat topic and you need to make it more interesting for the layman, so it was challenging in its own way. So I think with these few words, let me start sharing my slides. I strongly believe that this is only one way of my perspective, and I'm sure that good number of people in the audience also have their own experience, and it will be appropriate that they share also their experiences and learnings in the process. So let me share the slides. Sorry. This has to go. No. Fine. Yeah, this was the slide I was looking for. Sorry. Now, let me go on to the next slide. Now, most of the people in the audience may have this money control app on their mobile. There are reasons for me to believe that most of you would have this or any other broker app on your mobile. So I would assume that good number of you have dabbled with equity investment in one form or the other. Some may have pursued it for a longer period of time. Some, for some hurdles or mismatch in their alignment of what they wanted, they tried to drop out. So let me try to see of are there any points which we can address to the reasons why surgeons don't consistently pursue equity investment as a regular modality. The amount of time and the asset which they are going to invest is individually determined, it is personalized, but at the same time, the equity area per se cannot be ignored, is my understanding. And let us try to see how it is so. Now, when I say that good number of people are somehow exposed to equity, I would try to exclude two categories of members. One, the top 10 to 15% of the surgeons who start their day at 8 o'clock with a skin incision and go on to 8 to 9 in the evening. They are too busy. This is a very demanding area. So, and also, I think there is no need for them because they have adequate amount of cash flow. There is another category of people who are the lower 10%. They are risk averse. They are often belonging to the sometimes so-called category of non-operating surgeons because they don't want to take too much of risk. And they also pursue this as a sort of a game of chance or a gamble, and which could be a quickest way to bankruptcy. So when I address this topic, my topic is relevant to only this in between 75% of the people who should look at which type of investments or style of investment would suit them. Now, how do we normally start our equity investment? Often it is by the clamor which goes on in the media or in our social circuits or in the walking group or any other common place. And this often happens at the peak of the sort of market. Why? Because that time everything looks like a quick fix. You perceive that equity investment is going to be like a fast money, and then you think that why shouldn't I also keep investing and try to get good amount of returns in a short period of time? And how do you start? You have no idea. You start with some tip. You start with someone who has told you of where to invest, and you just randomly go ahead and put your money at stake. Now, the second question, often even if you are a literate, thoughtful person, and second thing is this is one area for some reason people are not ready to get exposed to their equity investment in public. Even when we are trying to frame this question, the topic, the general consensus was, why don't we talk about financial instruments in general and then involve equity as part of it? But we thought equity investment is one area for some reason has a taboo, and then this should go away. And that is the reason why we framed this focus topic very uniquely, which is going to address the equity industry per se. The second thing is we do not have anyone who we know because it's a financial part. Everyone wants to retain their own privacy. Everyone wants to don't want to reveal their way of investing. So you hardly have someone to look up to. Then the second option which often comes now is the financial advisor. Now remember, financial advisors, one, for the amount of percentage of money you are going to invest, you do not get a sort of qualified financial advisor. The financial advisors are one who are available for high net worth individuals. The minimum investment which they look at is more than 10 lakhs or 50 lakhs. So which a new beginner wouldn't like to get invested or put his money at stake. So financial advisor. Now what he does is he keeps financial equity investment only as a small segment of it. He would promote products which are going to be profitable for himself. And those are the mutual funds or debt funds or anything like that. He would try to create a basket. It is not to denigrate them, but if you are looking at someone who is going to handhold you, they are not the right person at the level of your equity investment. Then someone starts listening to something, they go on to YouTube, etc. But the biggest problem with this financial part is what to listen and is not necessarily replicated in the returns which they have. So often it is likely to be more theoretical than the actual scenario. Then sometimes you start mimicking something. You try to see from which mutual fund has invested, where he has invested, etc. And then you start to replicate it. But often what happens is this is a modality where unless you do some own study of your own or invests in stakes which would maintain you in the market, you will often land what happens is your returns will start decreasing. And sometimes you started an investment at the peak level, but what happens is the market suddenly collapses at some point of time, and then you get out of the market. That is how most of these people don't enter. So once they are not investing consistently, they will not have that confidence to invest in equity as a regular process. And the question of scaling up does not arise at all. So these are the things which most of the surgeons will encounter. It's a journey of most number of people. And I also relate with most of what I spoke till now. This is a few slides to show off my journey. I started sometime in 1992-93. This is the old share certificate. Some of the old people here in the audience would recollect how the share transactions would take place. And this is one of these paper document which you would have. This company went collapsed, it went into bankruptcy, and then one loses money. The amount of money at that point of time was 10 rupees face value, so relatively you would not have much of it. But these are part and parcel of the journey process of the equity investment. It is something of 1994. This is how the share transfers would occur. They would be transferred from one to another on name, and you would availability of revenue stamps was most important, and they're still lying with me unused. I did talk about everyone is an equity investor in one form or the other, but we don't talk about it, and that's the reason why I chose. Now, this is what I get aligned to. If you are trying to invest a significant amount of your money, hard-earned money, into an equity, it needs to be examined of how you are going to invest, which also applies to life. And it can occur only by design and not by default. You cannot start investing by just at the whimsical fancy of it. When I talk of all this of equity industry, please remember I'm very much fully aware that our profession is a celebrated profession. It is a high demanding profession. Any equity investment which you are going to undertake should not be affecting your professional life in any form. So that is a precursor, and I did follow that during my active surgical practice period. I did mention about this. Equity investment shouldn't occupy one's mind during professional activity or take professional time. I see unfortunately, many people carrying their laptop in the OPD. I see some people carrying their laptop in the, after the surgery. They switch on to moneycontrol.com app very frequently. I don't think, and inevitably, our profession is one which needs intense and focused activity. Any amount of slip in your thought process is going to reflect in the outcome of a patient in one form or the other. The outcome can be minorly modified or it could be severe in form. So please remember, I'm aligned with the entity of focus. I don't believe in a so-called doing many things at the same time, intensity and deep work. Please choose a type of equity investment that aligns with all this, whatever is your requirement. Please remember, trading and investment is totally different. Trading is something which you do on a regular basis, day to day, hour to hour. That is a time one which needs a lot of time. The second thing is that is one over a long period of time cannot be sustained. If you look at trading people, and unfortunately, many of our doctors get enamored by this trading because they believe that it is a past. If you look at the history of equity investment, the number of traders who are sustained over a long period of time is very less. They might have started somewhere, they have insider knowledge, and then they switched over to sort of equity investment. So-called celebrity people in India like Rakesh Jhunjhunwala or Ramesh Damani or Radhakrishnan Damani and etc. All of them started with trading, but at one point of time thought that it is not going to be a long term, so they switched over to investing. So there should be no constant inquisitors to know market status. Please remember, I don't look at market fall, rise every day. The investment is made in such a format that I would be able to have a free mind. One of the measures of wealth is having a free mind. Let me see that. No, but why is there is a need to have equity investment per se? We have various other modalities of investment. Why liquid? Liquid asset is almost synonymous with growth. Now you have liquid and real assets and other assets. Now why we would have this? Now, one of all investments which we are going to do is only to see that we beat the inflation and also the interest rates. These are two important. But what is the global trend now? There is increasing inflation. In whatever life we have seen this far, our inflation every year is increasing. The interest rates are lowering. This is not only in India, it is a global phenomenon. So where will you have wealth creation which will be able to be sustained for a longer period of time? That is the global phenomenon. This is financial phenomenon in a nutshell. When you come to our profession itself, we have doctors and surgeons per se are having economic and professional squeeze both together. We no longer are in a commanding situation as we were earlier. There is a professional saturation, especially in the cities. There is shift in dynamics. We are no longer self-employed. We are employees more often. The corporatization has given away major amount of decision making. Government regulations are increasing. This has squeezed the surgeons so much that sometimes unwillingly the basal instincts start representing in their practice. Some people do it unwillingly, some people can't cope with it. And that is the reason why, one of the reasons why, in spite of all this high education, health conscious, etc., why is that the doctors are sustaining or succumbing to stress and early deaths. These are the reasons associated with the profession. Then apart from that, there's a general tendency of aspiration, increased aspiration, and always there's a greed, dil mange more. The third thing is, next in the line, see, equity investment is one thing which is democratic setup. You do not have any external factors which will assess you individually. So this is a platform where all your intelligences can be put into go and the results can be seen by you and everyone, especially you. It gives a sense of confidence. All those blessings, intelligences which you are blessed with can be put into action. There's no limitation, no societal influence, no circumstantial influence, etc. Market is an animal, beast, they say. So the survival of the fittest. So this is one area, a platform where all your intelligences can be put to use, and then you can see of what you are capable of in terms which is measurable and visible. The next group of people who are this is advantage is it's a white collar job. It's a clean means. There's nothing dirty in this. And then surgeons also at one point of time are opting for some better quality of life, and some group of people want some financial freedom as well. Now there are some myths and realities associated. Easy and fast money, it is not so. That is the belief which is there. Please remember, don't go enter equity market at the whim and fancy of your choice. It is a hard working, it consists of, but what is the only thing is, it uses all your intelligences and the outcome is unlimited. There is no limit for what you can do out of it. So that is the difference between wealth and income. Income is something which you have to do repeatedly. Every year you have to do. But if you accumulate wealth, that is once you adequately accumulate wealth, that is adequate enough to sustain over a longer period. That's the difference between wealth and income. It's a gamble? No. Gamble once, but not consistently. It's not a game of chance. It's methodical. It is a passionate. You're likely to, this is one thing, the part about this is, you're likely to lose money if you are careless. Does it need an extensive domain knowledge? One of the important thing is, doctors, we do not have any financial knowledge, etc. Can we do this? Remember, good number of successful investors have been from non-financial background as well. So it is not the domain knowledge per se. It is the application of your intelligence. Please remember, domain knowledge is something which generates something. Application needs intelligences. You synthesize all the intelligence together and apply it, and that is your strength. It's a game of probability and not sort of a perfect arithmetic. Let me deliberate a little. So some nuances of the market. It's a market is a sum of opinions and emotions of the players involved. Market's nature is it's irrational and volatile. That's a part we have to accept. You cannot have a sort of assured and consistent returns. Swing occurs over the day. It occurs over a period. That is how bear and bull markets occur. Market is never rational and predictable. But what is one's nuance is the stock behaves consistently, persistently in one firm. What is that? This is a very I would like to draw everyone's attention to this one key point. I think this is one of these key areas which is, what is that drives the stock market? How is it that, is it everything, is it unpredictable? Is it only a probability? Growth of the company, growth in sales and growth in the profit of the company, if it is say 10 to 15% or whatever you say, the market will give you that 15% of return. What is unpredictable is whether that 15% will come within 1 month, it will come in 6 months, or in a year, or 1.5 years. But you will be getting 15% return from that stock. So please look, this is the one point factor or element, technical point which you have to note. How is the company growing? If it is going at 15%, you are likely to get market returns of 15% minimum over a period of time. Now, that is what is called as time correction, price correction. If it is inflated, it will take 1.5 years for it to return that 15%. But again, it is gallop later, or it will be price correction. So whatever price you have taken, it will be stagnant for 6 months, 1 year. It will not move. But suddenly after 1 year, it will move by 15%. So that is how you should remember. And second thing is, please don't assess your returns by stock returns, one individual stock return. You should be ascertaining it by the portfolio returns. The group of stocks which you have taken in a portfolio construction itself is a topic by itself. So when you do a portfolio of stocks, you should see at the stock portfolio returns, not at the stock. This small change in your mindsets will make stock market more acceptable, is my understanding. Second thing is, don't quote money in terms of rupees. I lost 1,000 rupees. I lost 1 lakh rupees. I lost 10 lakh rupees. Give an assessment with respect to the percentage. What percentage of your equity investment you lost? So that again gives you. So it puts a very objective figure to either your profit and loss together. And then it tweaks your thinking process. This is what I told you, that these 3 fundamentals you have to look at basically at a company when you're as an investor. Please note, how is the company growing, which is sales growth and profit growth. Efficiency of how efficient is the company. If you have looking at 2 figures important, there are many. See, each one of these categories are going to have multiple technical factors. But if you look at 1 or 2 points, just which I narrowed down, for example, efficiency of the company. How good is the efficient is it? They look at ROE, that is return. How much company is giving profit to the money which you have invested is ROE. And dividend. A company will give money to a shareholder only when it is earning money. If it is not earning money, it will not give dividend to the shareholders. So that's another important. There are some few areas where that also will be manipulated, but this is the basic, most of commonly that is. And second thing is, what is the market sentiment for this stock? How is the market evaluating this stock? So that will be ascertained by PE or price by book volume. What are the traits which an individual needs to have? It is intelligence driven. Please remember this. It is not a game of chance. It's time demanding. And most importantly, temperament soliciting. Okay. That Warren Buffett very appropriately said, the most important quality for an investor is temperament and not intellect. And if you quantify that, it is 40% intelligence and 60% emotions. Then we come to another important key area where surgeons could concentrate upon is, can we adopt a modality where we reduce the emotional element per se by making our investment process less discretionary, more mathematical. So that gives a balance to the emotions. So you make it more non-discretionary. So this is one area where each one of you have to find your own way to see, to reduce the emotional element and make it more mathematical. I talked about domain knowledge, intelligence, which I already spoken about. Now, an investor needs to define himself or herself. It is a doable thing. It is not something which is out of reach. Successful investors have been non-financial professionals too. What is most important, you should have a reasonable expectation. Your expectation should not be of doubling money, period, etc. It should be looking at some predictable consistency returns. So roughly what we would say, why are you investing in equity? There are many other modalities. We want to beat inflation, which is about 5 to 6%, and we want to beat the interest rate to 5 to 6%. So any returns which are more than 12% seems reasonably good for an equity. You can give another 2 to 3% more for equity because it is having some amount of risk, and that risk is in terms of capital loss. So if you have an estimate expectation of 12 to 15, you will not deviate from this more often. You are likely to get good returns because the market will always reward consistency for people who are being in the game, and blue chip or good company investments. They are always rewarded. So you are likely to be rewarded by more than 12 to 15%. But if you keep your expectations realistic in the 12 to 15 range, you'll be more than happy. This I talked about. Now, the another thing is this. I see there's a lopsided thing. We invest some amount, very paltry sum, I cannot quote a number, thousands or lakh or something. But the whole day I see someone seeing at the moneycontrol.com what is the market, how much stock it has up and down. But see, when you are investing, you should look what is the amount of time you are ready to devote. If you are investing adequate amount of money time, your time investment is so much. So your investment and the allotment of time should be proportionate to what it is. You have paltry some amount, you convert it into percentage. Again, I'm not interested in how much money it is. What is the asset? What is your asset? What is the asset you are invested? What is the percent of that asset which you have invested in equity? You are giving lopsided attention to a small amount percentage of investment. So that doesn't fetch you good returns in any form. So 80%, which is the Pareto principle, which is there, try to apply it. It should be worthy of your time and effort which you're going to do. What are the options available? I think most of it is, you are aware of it. If you are a starter in this one, I would suggest that you start first with passive direct investment, equity investment, that is ETFs. I will not go into, see, there is tremendous amount of literature, videos. You also have been bombarded with a lot of information. So my idea is not to give whatever is taught. I am just trying to share of what perspectives have helped me, what are the insights which I have gained, and see that they will be of some value to you. So I will not talk what is ETF, what it comprises, etc. Now, equity, unlike what I told you, the hurdles which you are facing, now what is the advantage which you are going to have? You have a democratized ecosystem. The second thing is, we never knew of what a person is investing. So you should look at which successful investor is there, whether his thinking process and actions align with you. You follow him on the YouTube or the Twitter, see whether it aligns with your thinking process and the investment which you're likely to do. Most of these people have a small case. What is this small case? Now, I said the basic direct investment for a financial advisor was 50 lakh rupees for a PMS. But the chunk of the major investors are in this less than 50 lakh people. So even a small investor like 1 lakh, 2 lakh, 5 lakh, 10 lakh wants to have financial inputs. So these so-called reputed financial advisors have started their small cases, which is posted on a platform called a small case. They give you a sort of a product. They describe the style of investment. They tell you the type of returns they are likely to get. It is not assured, but it is likely to get. The most important thing is this equity is in your portfolio. You are the master in executing this. They are just suggesting you. They are taking some paltry subscription amount, how much you want to invest, whether you want to invest or not. It is all this. And this equity is in your DP account. So you have the discretion. So that gives you the confidence. One, you are seeing how this financial advisor is thinking. How is he applying that? You will see why is he changing or rebalancing the small case. So you are getting a peek into how he is working. So if you pick up a financial advisor whom you are aligned with, you subscribe to his small case, see how he is executing it. You follow this for few years. Sometime later I'll come to this, but let me tell you now itself. When a postgraduate sees he's rotated all throughout our units, he is in a dilemma at the end of it. Every surgeon is operating in a different way. One is using Vicryl, one is using PDS, one is using stapler. What is that I should follow? This is a valid question by a postgraduate student. What is the answer I would give is, you follow the surgical procedure which has had a good outcome and which aligns to you, which you think has been the best one. Follow that for 3 to 5 years. Don't tamper with it. Use the same suture, same procedure, carry the same temperament which the boss carried, unit chief carried, or the operating surgeon, and only change it after 3 to 5 years. So you have got a hold over that 3 to 5 years period. More importantly, it has given you confidence to start your practice and stand on yourself. You have made a name. So the same thing applies also to equity investment. You take someone's, mimic them, whatever you like, do it for 3 to 5 years or some amount of time, whatever you think is appropriate. Then you start seeing the returns of it. Seeing returns is the best confidence booster for an investor. No other theory is going to help you. So please see that your returns are there. Then your confidence comes up. You know the process of how it should be done, and then you start implementing. And then if you think that you have mastered that or you have got a hang of it, then you switch over or try something else. Again, the trial should be such that you should not quit the equity investment. So that is one bottom line which you should have. You should lose money adequate enough to be in the market and not compelled to quit the market. That is what is the guideline which you carry. Then you promote yourself or upgrade yourself to direct equity investment. There's an option of PMS, which is for high net worth investors. Regarding the different styles of investments, we have small case, which I briefed about. Then we have wise investment. That's a blue chip investing. So blue chip investing is something which are reputed companies, the Tatas and like. Now you see, for example, Tatas, we had recently Ratan Tata, unfortunately we lost him, one of the gem person. Did you see any fluctuation in the Tata shares? There was no drop in the Tata shares at all because they are process driven. They have systems in place. Their integrity is unquestionable. Imagine this same happening to some other head of the, I don't want to quote any name, happening to some other corporate entity who was headed by, if something unfortunate happened, the market would react, collapse. So they are individual driven. They are more politically affiliated. They are circumstantial. They have demonstrated reputation. So that is the difference. You start here, not likely to lose. The another thing which often, like there's one old investor called as Peter Lynch who said that invest in companies which you see or purchase. Which is the AC you purchase at home? Which is the grocery you purchase at home? Which is the clothing which you use? Which is the refrigerator which you use? And see whether those companies are they doing well. So that is some beginning points where you can start with investing. The next is momentum investing. It is something a non-discretionary. Value investment. These all need a lot of depth of study and etc. Value investment, growth investment, distress investment, etc., which is not advisable for a beginner. So for beginner, I would advise three things: small case, blue chip investment, or momentum investing. One should align and adapt to a style that suits one mind. Avoid confusion. Another, today you start with something, tomorrow you and the walking you hear something else, you switch over to that type of investment on tips. Resources, where you will get this from? Remember, no free recommendations which you have. There are no free lunches, they say. So no recommendations if they are free. They are all paid promotions on the television or anywhere else. Often you hear on the television of buy, hold, and sell. Please remember that is applicable only for trading, not for investing. Now, broker also, you often again, broker, what is his interest? The more you purchase trade, more profitable it is for him. So the broker is seated somewhere else. The person in the terminal or your person in contact with you is somewhere else. He is just giving you the trend or market sort of sentiment. So that has no value. Tips, I said you, there's no free lunch. Twitter is a good learning platform. Please remember, they are accessible. All the top people in India and abroad are accessible on Twitter. It's a good learning platform. Then literature by Warren Buffett, Charlie Munger, very important. These guys, remember, they have not talked about stock. They have not given you stock tips, etc. They have always hammered how should be your mental mind status. How should you be thinking? Which type of thinking is going to benefit you? This is what they have always hammered, and some of the other literatures. These are some people, we have one weekend investing, again, non-discretionary, very good, transparent, good amount of integrity from whatever I know. Basant Maheshwari is one of those guys who has strongly influenced me in my earlier journey. He introduced me to the concept of road traveling, backpacking. He introduced me to financial freedom. I met him. He is a guy who is probably worth in hundreds of crores of rupees, all made from scratch, and everything is transparent and magnetic. It is not that you have to go and cling on to him. You just look at how do these people think, how do they act, and try to see whether you can implement it. Ramdev Agarwal is another guy who is from the Motilal Oswal. Whatever be the returns from Motilal Oswal, he follows Warren Buffett. So he's one of those guys who tried to implement in India. It's a good reading literature. ValueResearchOnline.com is very they are a bit public, what is it? A lady who is more towards activism, etc. But whatever, there's integrity in that. Screener.in also is one among them. This is another guy who is Ravikant Nawal. He comes in Twitter as novelism or at novel. He has given you mental models of how one can think. He has crystallized every thinking process. This book is available, The Almanac of Ravi Novel. It is free, please remember. And he does not get the returns of this. And it is one of the good books to have a thinking process in mind. So one quote, you see how depth this quote has. The measure of wealth is freedom. See, he has not talked about money, I think. Freedom from thinking. Anything. The measure of health is lightness. See how much depth is in this. The measure of intellect is judgment. The measure of wisdom is silence. The measure of love is peace. So something you have plenty number of snippets like this. Now, lastly, the Excel sheet is a part and parcel of the process. So somehow you will get used to it. I was talking about money, knowledge, and intelligence. I'm finishing last two slides. So knowledge is a domain knowledge, which I'm not underrating it. It is a knowledge which is helpful to generate something from nowhere. But intelligence is one which synthesizes the knowledge, and that is what you get out of it as intelligence. That is the intelligence which we use. That is the reason why even people from non-financial backgrounds are successful. Their domain knowledge need not be as best as these people. That they may have advantages, but it is a money management process. You're not generating money. You are trying to see in the available circumstance how best I can earn money. And so that needs two types of intelligences: logical, reasoning, mathematical, and intrapersonal. You should be knowing your own emotional status and your strengths. Anyone who is impulsive does not have. The last one slide is why surgeons should be embracing this more importantly. If you see the traits which a surgeon is having, most of them are used in equity investment. It's not a perfect science. It's not a perfect mathematical finance. It's a science of probability. It's a market of probability. There are multiple variables. Risk management. Can you imagine any other profession where you are dealing with a human life? We all know inevitably the risk of mortality is less than 1%. We know during our surgical career, some or the other we're going to have. What other risks are you going to face in your life? That should be you giving your confidence to not get shy away from equity investment. Analyticing, we also have analyticing. It's a doer's branch. We do something, we don't talk. Likewise, you make decisions and earn money, patience, etc. Follow basics. I told you this. Follow the same thing. You start somewhere, continue it. Once you start doing that on a regular basis, you come to a period where you get answers, authentic solutions. Then you take a leap of faith, courage, and dare to act. At the higher level, this is my last slide. Once you are aligned with the market, you come to a stage of higher level. From knowledge, basic knowledge, you go to intelligence. Intelligence at the higher level are seamless. They are seamless. Likewise, if you are indulged in the market will teach you. And that is why they say market Bhagwan che. Bhav Bhagwan che. You don't argue with market. You don't argue with the price. You accept that and then change, mold yourself and find your own slot, which is going to be beneficial. So it is a reverse engineering. Whatever you have learned in market increases the clarity of your life also. This is a very important thing. I think with this I conclude my talk. Thank you one and all. I'm open for questions.
Thank you very much, sir. It was indeed a good talk and we learned a lot. Can you tell us what is equity and what do you mean when we talk about investing in equities? Do we become a part of the company? Do you own it or how is it?
Yes, you are absolutely right. It is part ownership of a company. You are a shareholder. So you are a part owner of that company. So that I think that answers it. So you get the whatever profits and losses are shared with you in one form or the other. So and then if they give dividends, the shareholder gets the dividends.
Given our demanding schedules and high-stake job, do you think it is practical or necessary for surgeons to invest in this equity?
I think so. This is my understanding. I also understand. I do not debate that there is a demand of the time of a surgeon. I have tried to exclude this. I have given you reasons of why it is needed. There is no. For example, you take, another thing which I strongly believe over a period of time is whatever has happened in the Western world, you will be seeing it within 10 or 20 years later in India. Today, their inflation is higher, interest rates are coming down. And the number of people are equity investors, there are more. if you are having friends, doctor friends in US or anywhere else, you just inquire. Their equity investment starts much earlier in life, and everyone is involved in that. See, equity is one among them. They may be investing in real estate. There is also a real asset like gold. There are many options, but this is one entity which you cannot afford to leave alone just because you have one has not made adequate effort and a systematic approach. If you are thoughtful, systematic, and have some structure, I'm sure you will catch the bug of stock investing.
Sir, investing in equity comes with both risks and rewards. Could you help us understand this balance?
Dr. Prashanth, I spoke about this part once, but still I'll reiterate that investment, I see nowadays relatively, the listing of the company is scrutinized. The SEBI, which is the regulatory body for stock and the companies, are relatively more proactive than what it was earlier. The number of companies which are going fat or they are going bankrupt is much less. So the chances of having loss and a company going bankrupt are lesser. If you are wisely pick up the company, the risk is relatively lesser. The problem is we change our style of investing very frequently. So this, if you relatively try to work upon, it is more likely that aversion towards risk will come down. That doesn't mean that risk capital loss will be there, but I said at the portfolio level, one stock you may lose. That is the advantage of having a portfolio. You invest in a portfolio number of stocks. Even if one stock goes bankrupt, the 9 are adequate enough to compensate for that.
You have explained very nicely how to start investment and how to overcome the pitfalls. How crucial is it for a surgeon to have a financial advisor? And if so, what should we see in that financial advisor?
The most important thing which you should be looking at is the integrity of the financial advisor. But this is a very easy to say, but how would you know that? You do not have an equity advisor whom you are interacting with. He is somewhere who is distantly placed. He has a representative of his at your place. Your contact point or the regional manager who is contacting you is someone just a messenger. So these are the issues. But one is answering your point. Integrity is the most important point. The second thing is what has been his past history. And as I said, this two things which are there. Third thing I've seen is financial advisors. Please try to differentiate between financial advisor for equity and financial advisor for other products. You always have a financial advisor who are covered under an umbrella of products. They deal with insurance, they deal with mutual fund, they deal with all sorts of things, their debt, etc. So their motivation for equity suggestions is less for them. So they are likely to push you towards mutual fund or other investments rather than equity.
Is equity investment more suited for long-term wealth creation, or can we also do support short-term financial goals?
Goals are, but basically it is for long term because market is unpredictable during a short period. It may so happen that you have a goal which is 2-year goal, 5-year goal. It may so happen that your goal is met within 1 year or 2 years. But it may so happen that if you cannot if you're investing in market, please remember, do not invest money which you need for 1 year. You say, I am going to invest, I need money after 9 months or something. Let me see how much I'm going to earn in 9 months. Then you are caught in a dilemma. Please don't do that. You are investing only money which is surplus with you. There is no hurry to get back the money. Then only you will create wealth. You don't want small 40% to 1%, 10%, 5%. You want a good chunk of investment. The most important thing, you want to gain confidence. You want a process to to tune to yourself and then apply it. That is where you can scale up.
We have a question from Dr. Sangamesh. He asks, how to overcome fear of investment in equity?
I did talk about it. Ignorance is the cause for, if you know what you're doing, some of these points which I have quoted now, you don't have to be a fundamental technical analyzer, each point, data, etc. So much. You should have a fairly broad idea of it. Invest with knowledge. That is one, I think, if I have to answer that in one line, thoughtfully invest with knowledge, not on ignorance. So that takes care of the fear of risk. Remember, risk is different from fear of risk. Fear is a pursued one, which may not be exactly true. So if you have to address that, you have to be knowledgeable and thoughtful.
We have another question from Dr. Sudhir KN. He wants to know about IPO and block trading.
I have
I know.
Yeah. I am a direct IPO. I did invest sometimes. Now what has happened with my take on IPO, today's IPO, unlike IPOs earlier, where listing prices were very high and allotment also was very high. The chances of allotment were higher earlier. Now the number of equity investors are so high, easy availability of money. Now you have many institutions which will give you lend money to invest in IPO. So your chances for allotment is, so the amount you are investing, you are putting an IPO for 5 lakhs, 10 lakhs, whatever it is, and you get 50 shares, 75 shares. The listing has come down because now no company is there which is not backed by VCs, venture capitalists, or the other investors. So they are there, which are all IPOs are fully priced now. The so-called listing benefit you used to get earlier has relatively come down, is my understanding.
And one more question from Dr. Akshat is asking about future and options. Is it an option for a busy surgeon?
No. There are two things. One, direct answer for busy. It is not a good option for even a relatively balanced surgeon, is my understanding. Okay. It is a full-time. If you are going to change the profession, switch over, and then you think you hold, you can try that. Again, try, not a suggestion. The reason is it is a game of chance. Please remember. You look at history of stock market, which is there almost 150, 200 years old stock market. How many people have made money purely from trading? They are handful. Okay, so it is wise enough to go in a line which is having more probability of returns rather than try to see, these who go to trading is often people who have that gambling instinct is there with them. That is not controllable by them. These traders, traders reach the trading terminal before the stockbroker. 8 o'clock they go and sit in front of terminal. They are addicted to it. Okay, it's a gambling. So I think I absolutely out of question. That's my understanding. Please don't do that.
Our chairman Narayan Hebsur has a question. Is asking about portfolio diversification.
Portfolio
diversification.
You have one is asset diversification. Okay, one asset diversification is different types of assets, allocation to assets. Portfolio diversification of equity. So in this, what is suggested is you have a basket of stocks, not too much of diversification. Please remember, don't have another 50 stocks, 100 stocks. Pick up some choosy stocks. Take some baseline of what is that you would like to take. Distribute it in a form like stocks which belong to Nifty 50 or top 100 stocks, 100 to 250 stocks. So the market capitalization stocks are divided into 1 to 100 stocks are large cap. 101 to 250 is mid cap. 250 and below Nifty is small cap. you divide this percentage based on your risk appetite. The stabler ones are the top 100. Next in the descending order is mid cap. Small cap are highly volatile. So based on your temperament, you try to create. This is creation of the portfolio by your temperament. You want to be a bit safer and more thing, give more allocation to Nifty, reduce on small cap. Returns also will be compromised, but please accept that returns, but you will have stability. It gives you confidence. Your stay in the capital market will be for longer time. And once you be there, then the opportunities are unlimited over a period of time. Don't go out, don't do anything which pushes you out of the market. That is my bottom line which I want to do.
So we have one question from Dr. Sampath Kumar Poral. Is asking what is CAGR?
That is compounded annual growth rate. Okay, CAGR. So all the returns are quoted. It's a measurement, yardstick, because one figure we say 10% return, but that 10% we know is a simple interest. The second year it gets compounded. 110 rupees gets another 10%. So this compounding, so what is the net result percentage which 100 rupees has accrued over a period of 2 years or 3 years? This is called as CAGR.
If any more questions?
Prashant, I think so. Siddesh sir is waiting. Sir, it was an excellent talk. There are
Thank
many
you.
people who want to ask so many things. We'll invite few people. First, we'll start with our past president, Siddesh sir. Siddesh sir, you are on the other call, I think so. Dr. Venkatesh is, sir, you want to ask something, sir? Dr. Venkatesh?
Sir, nothing, sir. Nothing, sir. Nothing.
Siddesh sir? Sir, waiting
Hello,
for
hello.
your...
You are asking me
Yes,
to
sir.
talk. Okay.
Yes,
Chairman,
sir.
sorry. No.
You're
I was
talking to
having a
everybody,
call
sir.
from my hospital.
I know, sir.
I heard you. I cut the call. Anyway, I think I should just congratulate first at the outset the office bearers, especially the chairman and the secretary. They're doing a wonderful job overall covering the interest of the members. And one of such interests, protecting the interest members is to protect their assets and money also as well. So I think you are helping them to do that because it is equally important to bring down the stress levels is to protect our money in safe way. And I think we have very wise advisor today. He has spent a lot of time. I'm sure he has put in so much of effort and time to prepare this presentation as well. So it just goes by the way he has meticulously covered as he is usually. And not only that, he has obviously made tons of money, I hope, the way he maturely advised. So, but unfortunately, I have not taken his advice earlier. That's what, but at least the youngsters who have joined in probably can be in touch with him. And Sharad is a very nice guy, very soft, but of course, he will very patiently tell you whenever you are in doubt. I think privately also, you don't mind him, you can contact him. I wish he will advise you. And I think the way Prashant prepared his initial talk, initial introduction, and also the way he moderated the program shows that he is equally matured. And of course, he is I
from you,
don't say
sir.
born this one, but he has made a fortune for himself also as well. So these are people whom we should look up to make our futures. See, we all make money, no doubt, by our profession. No doubt, whether you want or not, a sincerely practicing surgeon today also will make money at the end of 30 years of his practice, or 35 years like us. But that money should multiply for itself to look after you after 35 years. What life you have should be a comfortable one. Should be, we all deserve to be comfortable at the end of our profession because it's so much of stress, especially surgeon's life. I'm sure there are others also who joined in, I saw, but it doesn't mean that every doctor is going through this stress. I think the best way to bust this stress at the end of our profession, at least at the end of our journey, at least to have a good sum of money, which will sail you through to enjoy and pursue whatever you wish you should have done all these years, but not have enough time to pursue that. So that money should be enough to, because you cannot imagine only by profession, if you save money and try to enjoy that at the end of 35 years, however much you say you have done enough, it may not be really enough for that particular day. Maybe you might just do an economy travel in a year, but stay in a budget hotel. Well, you deserve much more than that. I will tell you frankly. For that, today's program was very essential to make an understanding, and also the way how cautiously you can do that safely also. So keep taking these advices. I wish all of you do, but only one small piece of advice: don't park your money or savings in one part of the investment. Have multiple investments also elsewhere. Have one small investment in real estate also, and have one small in gold. You don't have to buy gold and keep it in your house. You can do it in other format, just virtual format also, which I think Sharad told it very nicely. So that also you can do. So have it everywhere, but not taking too much of a risk. But if there are certain intelligent fellows I have found in my colleagues, they do have a lot of intelligence. They have learned probably that art. They do make money by doing a lot of jiggling, but you need to be really good at it and follow those markets very, very closely, which is possible only by you. Otherwise, as Sharad put it, you depend on some people who have a long time tested integrity. Is all I have to say. All the best. Safe money, safe journey, safe, happy life. Thank you.
Thank you, sir.
Chairman, sir.
Shivprakash.
Chairman, sir.
Shivprakash. Yeah, Shivprakash, please speak.
Sir, Venkatesh, yes.
Yes, sir. Please tell, please.
Sir, one small request.
Yes.
Anyway, we have stalwarts like Sharad sir and Prashanth. Why don't they start a WhatsApp financial group from KSCASI, so that the youngsters will start investing at early thing,
Correct.
and so that day-to-day tips. And this is not one-day program; it should be ongoing. As sir said, it's a long-term process. So it's only a request from me. If it is feasible, they can start one KSCASI financial group, WhatsApp separate group, so that day-to-day like learning
Next
should happen
steps.
for a long term. Yes, sir. Yes, sir.
We'll start
If
it
it is
tomorrow
feasible.
itself, sir.
Yes, sir.
Yeah. Sharad would be happy to do it, but I will tell you, whatever you gain, you will ask 1% of it.
No problem, sir. Sir, I have found integrity in
just
sir.
a joke, but we can
You
definitely
can't find a better advisor than Sharad, sir.
Yes, sir. Yes, sir. But it is time for Budweiser.
Yes, sir.
That is the best joke of the day.
Nice.
Shivprakash is waiting to ask something. Please come ahead. Dr. Shivprakash, you want to say
Sir,
something?
nothing, sir. Nothing to ask, sir. We
Okay.
government doctor, we are very poor managers of finance.
Fine.
No.
Sir, I have one question that is for the postgraduates. How do you tell them to go ahead for investment? What they should do? Start with.
I think the same applies to postgrads as well. Okay. Obviously, they still have a career to look up to. Investment is not a primary focus. They should not actually, if you ask me in one sense, the student should not be looking at investing at that point of time as a postgraduate student, because that will be diluting his attention. But if he is able to juggle adequately and is sure that he is able to manage, compromise on something else, his entertainment or other activities, and then do this. See, equity can be a passion also for some people. This is how people stick on for a longer time. If that person has felt that, he has that inclination towards it, he wants to start, but he has to have that guideline to say that it should not be disturbed, because The whole life is there for investment. But the studying part is there is a limited period. He should not be deviating from his study activities. And remember, he would also need financial resources for to see that his future is established. He cannot expect to, if a postgraduate is expecting to earn money and then start his practice, that's not an appropriate way to look at investment in equity. Is my option. That's understanding.
Yes, sir. I
Any
think
other
so. It's
questions?
time up, sir. We can, Chandru
Close it out.
will stop us. Otherwise, so many things will go wrong. That's why. Chandru,
No,
please
think,
present the word of
I
thanks.
agree, but one last comment, I would say you should start early, investments early. In fact, I would be advising the youngsters, do it in a small way without much of risk. Don't have to go to equity. You can do some other way, like mutual fund or something. Don't going through the agency itself, but do a good small portion of whatever. Stipend also they can keep investing, because earlier they catch with the good companies, they can hold on to longer period. So that is a better way of looking at things, but be safe.
I agree with Dr. KL Ventesh also in his chat has mentioned it, and also Dr. Siddesh also has told about it. It is an individual choice also. If they are able to do it, there is nothing which prevents them. I am not trying to forbid anyone from doing. That is not my input. But I'm saying that these are the better ways. If you are able to do that without choice and without compromise, please do it. As Dr. Siddesh said, you start investing as early as possible. Like Warren Buffett started investing much earlier, with childhood itself. That's one of the things. You will have this odd things, but majority of the people, the only concern is they should not get deviated, because what happens is the earning small amount of money which they make is an incentive to get distracted from the study and give more time towards the investing part. So that's possible. If they are able to control that part, that's fair enough.
If there are no
Yes,
other
sir.
questions, we will
Conclude,
close the
sir.
session.
Thank you.
Yes, sir.
Thank you, Dr. Sharad, for your
Thank you.
insightful talk, and thank you all for your active participation. I hope today's session has given you valuable perspective on how to approach equity investment confidently. Let me end with this thought from Warren Buffett. Someone sitting in the shade today because someone planted a tree long time ago. Like in patient care, we successfully train our PGs to come up and become a tree. Thank you everyone for joining us today, and let's continue to invest wisely in both our profession and our future. Over to Dr. Chandrashekar.
Yes, sir. We'll close with a vote of thanks. As rightly said by Dr. Siddesh sir, that all surgeons knows how to earn, but only we lack that knowledge of investment and saving and getting multiplied that. So this was a small effort from KSCASI for its members. So just to teach them so the way of investment and to give the knowledge of investment. And hopefully next month, we are coming out with one more program that is non-academic, mainly on this income tax, how to do this income tax, how to save, or all those things will be done by a chartered accountant. Next program is that in the first week of November. Hopefully everyone joins for that also. And behalf of KSCASI, I thank Dr. Sharad Tanga sir for an excellent informative talk, and which he gives on the investment. Really, it's wonderful, and he gave a lot of tips for investment. Hopefully, if you will start from tomorrow, definitely. And behalf of KSCASI, as Venkatesh sir was mentioning, we are planning to start an investment group also with the advice of Dr. Tanga sir, Dr. Siddesh, Dr. Prashanth. There are a lot of people who are doing this investment since a long time, not only in stocks, and there are other parts of investment also that is also needed. As Siddesh sir said, we need to divert in multiple investments, not only in stocks. And also I thank Dr. Prashanth B for his excellent moderation for today's program, and all the members of KSCASI, and our past chairman of ASI, Dr. Siddesh sir, and executive committee members of state and national ASI, and the postgraduates who have logged in. Thank you very much. Thank you one and all. Good night, everyone.
Good night.
Good
Thank
night,
Thank you,
sir.
sir.
Good
Thank
night.
you so much.